Ladies and gentlemen, good day and welcome to BSE Limited Q3FY22 Investor Conference Call. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star and 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Anand Sethuraman, Head Investor Relations, BSE. Thank you, and over to you, sir.
Thank you so much. Hi, this is Anand from Investor Relations, and welcome to BSE's earnings call to discuss the Q3 FY2022 results. Joining us today on this earnings call is BSE's leadership team consisting of Mr. Ashish Kumar Chauhan, Managing Director and Chief Executive Officer, Mr. Nayan Mehta, Chief Financial Officer, Mr. Sameer Patil, Chief Business Officer, Mr. Girish Joshi, Chief Trading Operations and Listing Sales, Mr. Neeraj Kushreshtha, Chief Regulatory Officer, and Mr. Kaustubh Tavadia, Chief Information Officer. Do note that the conference is being recorded and a transcript of this call will be made available on the BSE website. Before we get started, I would like to take this opportunity to remind you that our remarks today will include forward-looking statements. Actual results may differ materially from those contemplated by these forward-looking statements. Any forward-looking statements that we make today on this call are based on assumptions as of today, and BSE assumes no obligation to update these statements as a result of new information or future events. I would now request Mr. Ashish Kumar Chauhan, MD and CEO BSE, to give a brief overview of the company's performance, which will be then followed by a Q&A session. Thank you.
Thanks, Anand. Good evening, everyone, and thanks for joining the call today. I hope all of you and your loved ones are safe and keeping well. Before I start with the update, I'm glad to say that despite the most recent COVID scare, BSE continues to function normally without any interruptions or glitches and has been able to improve business and financial performance. I start with the broad financial results for the quarter ended 31st December 2021. BSE's operational revenues have grown by 60% to rupees 192.67 crores for the quarter ended 31st December 2021 from rupees 120.59 crores in the corresponding quarter previous year. Further, BSE's net profit attributable to shareholders of the company increased by 89% to rupees 29 crores from rupees 32.37 crores in the corresponding quarter previous year. The operational performance has continued to grow across business segments, resulting in higher operational revenues and profits. Steered by our robust financial results and the continued confidence in the long-term future of our business, the Board of Directors of the company has recommended issue of two bonus equity shares of rupees 2 each, fully paid up, for every one current equity share of rupees each fully paid up. This is in line with the company's objective to strengthen its capital structure and enable shareholder participation in its growth. On the business side, let me start by covering our primary market segment. Funds raised by India Incorporated continues to be buoyant, and BSE platforms continue to remain the preferred choice by Indian companies to raise capital. The BSE bond platform has enabled issuers to raise rupees 5.2 lakh crores through issue of bonds, commercial papers, municipal bonds, units, etc. And the equity platform has enabled fundraising to the tune of rupees 72,213 crores during the quarter ended December 2021. The total number of investors registered with BSE now stands at 9.6 crores and continues to move up. I shall update you on BSE's trading segments now, which have witnessed growth in the quarter ending December 2021, reflected in the operational performance in the current period. For the quarter ended December 31, 2021, BSE's average daily turnover in the equity segment increased by 44% to rupees 5217 crores as compared to the corresponding period last year. In the equity derivative segment, the average daily turnover increased by 23% to rupees 2.47 lakh crores as compared to the corresponding period last year. In the currency derivative segment, average daily turnover increased by 29% to rupees 27,124 crores as compared to the corresponding period last year. BSE continues to make rapid inroads in the commodity derivative segment and remains second largest commodity derivative exchange in India. The average daily turnover for the quarter ended 31st December 2021 increased by 80% to rupees 4910 crore from rupees 2730 crores in the same period last year, with market share increasing to 12.5% from 7.4%. The steady growth can be attributed to new and unique products such as almond, cotton, J34, Sufi steel futures and gold options in goods, as well as continual focus on deliveries and innovation. BSE also continues to bring in expertise, depth and liquidity by signing MOUs with more physical market participants, including Gem and Jewellery Council, Nasik Sarafa Association, South Tamil Nadu Jewellers Guild, and the Bullions and Jewellers Association. BSE also sought regulatory approval to launch electronic gold receipts as a new segment that will enable the trading of spot gold in India. Let me now update you on the BSE's SME segment. I'm happy to inform you that the next month, BSE will complete 10 years of operationalizing India's first SME exchange. BSE's endeavor to support the SMEs and startups in India has seen its listing 5 companies on its SME platform and 1 company on its startup platform during the quarter ended December 31, 2021, taking the total companies to 358 and 13 respectively. The 358 SMEs raised 3794 crore rupees and the 13 startups raised 58.6 crore rupees via the BSE platform with now market value of 46,659 crores and 261.2 crores respectively as of December 2021. BSE's market share in the SME segment stands at 60%. I shall now discuss our mutual fund distribution platform. BSE Star MF, India's largest mutual fund distribution platform, continues to grow at a remarkable pace, with total number of transactions growing by 106% to reach 5 crore transactions during December 2021 quarter from 2.4 crores in the same period last year. Overall, the platform achieved 12.82 crore transactions within the first 9 months of financial year 2021-22 as compared to 9.38 crores achieved during the entire financial year 2020-21. BSE Star MF platform continues to scale new peaks in terms of single-day transactions, with the platform posting a high of 26.65 lakh transactions on January 10, 2022, outdoing its previous best single-day record of 26.52 lakh transactions on November 8, 2021. It also continues to contribute consistent net equity inflow to the mutual fund industry, with inflow of 21,081 crores. The BSE Star MF app, launched in May 2019 to help mutual fund distributors register clients on real-time basis and execute paperless transactions, has processed over 45 lakh transactions till date. I shall cover developments of our subsidiary companies now. BSE promoted international exchange at GIFT City, Gandhinagar. India INX has been growing exponentially ever since it commenced trading activities on January 16, 2017, with average daily trading turnover of $4.676 billion and a market share of 94% for the quarter ended December 31, 2021. India INX has more than $58 billion medium-term notes established and over $34 billion of bond listings till date. Owing to investments by certain strategic and financial investors, BSE stake in India INX has further reduced to 71.81% and 69.28% in India International Clearing Corporation as on 31st December 2021. India INX and India SSE have invested rupees 6.75 crores each. International Bullion Holding IFSC Limited holding company for setting up and operationalizing the International Bullion Exchange for its 10% stake each. BSE's wholly owned subsidiary, BSE Technologies, is the technology solutions provider for the International Bullion Exchange at GIFT City, for which the mock trading has started. And that is a similar technology we are going to use for starting spot gold segment for BSE in domestic area, as approved by the budget last year and as applied for the regulatory approval by BSE this year. On the insurance distribution front, BSE EBIX Insurance Broking, a joint venture of BSE and EBIX FinCorp Exchange, is now present in all the 3 key insurance verticals, auto, health, and life, and is integrated with 7 general insurance companies, 5 health insurance companies, and 4 life insurance companies after onboarding LIC, Life Insurance Corporation of India, on its platform in December 2021. Further, GoDigit, which was in offline mode, is now integrated in BSE EBIX portal. BSE VIX has over 4,650 active certified point of sales as of December 2021. The total premium collected was rupees 1.89 crore for the quarter ended December 2021, a growth of 186% from the same period last year. BSE holds equity stake of 40% through its subsidiary BSE Investments Limited. BSE Agriculture Limited, BEAM, a joint venture between BSE Investments and Frontier Agriculture Platforms Private Limited, operates a nationwide electronic institutionalized transparent commodity spot trading platform to facilitate spot commodity transactions across the value chain. As mentioned in our previous call, the BEAM platform received regulatory approval to launch non-agri commodities on its platform for spot trade and now working with industry participants to offer the same. It has already enrolled 788 members, an increase of 98 members from the previous quarter. Trades worth rupees 79 crores in 3 agricultural commodities, Juar, Bajra and Bag, were executed on the platform during the quarter ended 31st December 2021. Companies working closely with the governments and government enterprises to enhance the efficiency of procurement and sales of the commodities in different states. I would like to update that BEAM has received mandate from the state of Maharashtra for carrying out auction on its platform. Considering the market and opportunities of this platform is expected to grow at a faster pace in time to come in both agricultural and non-agricultural segments. As informed in our earlier call, the power market regulator, Central Electricity Regulatory Commission, has granted registration on 12th May 2021 to Plan Urja Solutions Limited to establish and operate a power exchange. The company name was changed from Plan Urja Solutions to Hindustan Power Exchange Limited in November 2020, and itself as a power exchange. Subject to regulatory approvals, the company proposed to commence live operations in the last quarter of financial year 2021-22. BSE has a stake of 22.61% in the proposed power exchange through its wholly owned subsidiary, BSE Investments Limited. Currently, the exchange is doing internal mock trading for its technology to test the integration of all its software programs. BSL was incorporated in March 2021. It is known as BSE Administration and Supervision Limited. The company received approval from SEBI to administer and supervise investment advisors in June 2021 and has now received approval as an accreditation agency for investors in December 2021. As of January 5, 2022, BSL has onboarded 936 investment advisors on its platform. In addition, BSE has also onboarded 4 accredited investors as of January 2022. Being allowed to act as a regulator to regulate conduct of group of intermediaries in the financial markets through a subsidiary is a strong reflection of BSE's capabilities and regulators' confidence in the governance of BSE. As mentioned in our previous call, SEBI had accorded its in-principle approval to BSE Technologies, a wholly owned subsidiary of BSE, for Know Your Client Registration Agency, KYC-KRA. I am also pleased to inform you that BSE Technologies has also received an in-principle approval from RBI for setting up and operating trade receivables discounting systems trades under the Payment Settlement Systems Act 2007. Trades is an electronic platform for facilitating the financing discounting of trade receivables of MSMEs through multiple financiers. We are hopeful that with the launch of this trade platform, BSE will be able to address the financing issues of MSMEs and contribute to their growth in addition to raising funds in equities for them for the last 10 years. There is no added capital infusion required from BSE for these businesses. The KYC-KRA and trades businesses will commence only after receipt of final approval and certificate of license from the respective regulators. Now I shall brief you on the financial results for the quarter ended December 31, 2021. For the quarter ended December 31, 2021 as compared to corresponding quarter previous year, on a consolidated basis, BSE's operational revenues have grown by 60% to rupees 192.67 crores from rupees 120.59 crores. Transaction charges revenue has increased by 99% to rupees 62.98 crore from rupees 31.71 crores. Listing related income increased by 19% to rupees 57.31 crores from rupees 48.27 crores. Book building fees increased by 219% to rupees 21.81 crores from rupees 6.83 crores. The clearing and settlement operational revenues increased by 85% to rupees 11.59 crores from rupees 6.26 crores. Net profit attributable to to shareholders of the company increased by 89% to rupees 61.29 crores from rupees 32.37 crores. The operating EBITDA has increased by rupees 55.33 crores to rupees 57.5 crores as against rupees 2.21 crores, with operating EBITDA margin increasing to 30% from 2% earlier. The net profit margin increased to 28% as against 20% earlier. With this overview, let me welcome you once again and invite all of you for questions and answer session. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Participants, you may press star and one to ask a question. The first question is from the line of Devesh Agarwal from IIFL Securities. Please go ahead.
Good evening, sir, and congratulations on a very strong set of results. Firstly, sir, I wanted to understand this the SEBI regulations around segregation and monitoring, which was made to Feb. What is an update on that, if you have at all? And what is the expected impact of that on the volumes? If it is correct, will the cash component of margin requirement will go up even in the cash segment, or what will be the impact exact?
There won't be much impact on BSE's operations because our subsidiary that does clearing, where the margins are kept, also provides the interest on the cash margins kept with it. So usually, in case the margins kept with it increases in cash, there is also an outgo that is similar or commensurate, and that's why it won't be too much of an impact.
Okay. And any update also on the likely implementation of this?
Basically, on somewhere in it should happen soon.
Okay, sir. Secondly, sir, in terms of a new product, we have been waiting for the monetizations of the same. So any more clarity among the various products that we have started and where we are gaining traction, whether we will be monetizing any of those new revenue streams?
The board, in terms of monetizing, creating selling of those businesses, board had approved kind of monetizing framework for the mutual fund Star MF platform. We have not yet found a suitable buyer for that. We are, in a way, we had also announced earlier for last several quarters that we have tried to request the potential suitors to also consider any possible structures they want. But we have not yet found anyone yet who is willing to work with us on the valuation we want, and so it's still currently pending. No other platforms other than Star MF we are searching for active partners yet.
No, sir. Actually, I did not probably frame the question in the right way. What I was trying to understand in terms of creating new revenue streams, be it the commodity platform or any other platform, where we can start charging tariff and create new revenue streams for the business. Currently,
we charge for SME listing and also transactions. For mutual funds also we do that. For equities we do that. Listings fees we charge. For the commodities we have not been able to yet charge, and in fact there is a liquidity enhancement program that is going on. Similarly, for equity derivatives there is a liquidity enhancement program that is going on, and we do not see anything happening in the immediate future on that.
Understood. And we'll continue with the liquidity enhancements programs at least for the foreseeable future? in both the products?
In currency futures, we have been able to gain some market share in the last quarter compared to previous quarters. So that is also heartening. But for the commodities and equities derivatives, we plan to continue doing liquidity management schemes.
Okay. And one last one, sir. In terms of the power exchange that we are coming up, you said that mock tradings are on to test the technology. So has BSE provided the technology, and would we earn any revenues on that for providing technology, or it's a third-party vendor technology?
A large portion of the technology has been provided by BSE, and BSE will also provide support for trading and operating technology. So it's going to be revenue accruing as and when it starts trading for the BSE itself in addition to the exchange. The same or similar technology with some minor modifications, BSE will also use as and when the electricity futures are allowed. So in some ways, this is also a kind of a strategic call that electricity futures will be allowed somewhere in distant future when this power exchange was conceptualized. And BSE should be ready with its technology and other things like what BSE did for the GIFT City-based spot gold exchange, that BSE became ready for that, and BSE offered its technology to the joint venture of all exchanges there, which has made BSE ready for the gold spot exchange for the domestic area also. Similarly, power exchange technology which BSE has made will help BSE trade electricity futures also as and when it's allowed. You might have read the news article that electricity futures will be regulated by SEBI, while as the spot exchanges in power are going to be regulated by CERC, which is currently the case. And so electricity futures also are on the anvil probably this financial year, next financial year or this calendar year. And we would be ready compared to other exchanges as we are currently working on that for the spot currency, spot electricity exchange.
Understood, sir. And one question for Nayan, sir. So just wanted to understand the tax rate better. So what is the expectation for effective tax rate at the Concall level for FY22?
So currently, Devesh, our net effective tax rate is around 28% for the last quarter, for the last 9 months. And since we have a MAT credit which we need to utilize, we have stopped investing in tax fees, and it will stay at around this level going forward for next few years.
Perfect, sir. Thank you so much.
Thank you. Participants, you may press star and 1 to ask a question. The next question is from the line of Ojas, an individual investor. Please go ahead.
Congratulations, Ashish sir, for the strong results, first of all. So I wanted to have a quick insight from you on the recent MOU dated the 22nd January 2022 for the JV between India Inc.'s IFSC and Taurus Kling Blockchain IFSC in GIFT City for ETFs apparently on Bitcoin. Also, I was quoting a reputed fund manager who tweeted last month from his verified Twitter handle that there was a possible crypto exchange in the making where, say, a BSE or an NSE would act as a mother body and would regulate other crypto platforms and work in tandem with SEBI and other regulators. So there is a lot of grapevine around the government, say, coming out with a crypto bill later this year, which could pave way for another blue ocean business for us. And I'm assuming that this would be a very high margin thing if and when it works out. So would you like to comment on it, or would you term this as an untrue or a baseless rumor? And my gist being, so is BSE in any case working towards this with the regulator? Also, with the digital rupee being announced, do we think us as an intermediary, Bombay Stock Exchange, will have a role to play there?
So, in some ways, it's easier to answer the India International Exchange part. There is basically a test kind of a framework which the GIFT City has for testing newer products, in which an application has been made by the entity you mentioned, and they have proposed that they be traded on whatever they want to trade. It gets traded on the India International Exchange. So that's where basically that memorandum of understanding or whatever it is called has come into play, but I don't think the approval has yet come. And as and when approval comes, the technology of BSE Group is reasonably robust to allow trading of any type of products, be that cryptocurrencies also. So if they are allowed, as and when they are allowed, they will be basically ready at India Annex to trade that, and that would be the case as and when it is allowed in India. Currently, we are not aware of any move of any type by government agencies or regulators to allow trading of cryptocurrencies on domestic exchanges, and that's why I would say it's a matter of speculation. And similarly, digital rupee for us will be another type of a payment mechanism. BSE, as you know, is very, very strong in payment technologies also. And so we should be able to handle as and when the digital rupee comes into play. But we are currently not aware of the details of what is in store. Incidentally, BSE is also becoming one of the promoters of the ONDC. It's a not-for-profit for the transactions, e-commerce transactions, physical e-commerce transactions in goods like the internet. I mean, like what you do with Amazon or Flipkart. There is going to be interoperable transaction platform or a standard which is being defined by ONDC, and BSE is becoming a kind of one of the early contributors to that. Of course, it's not for profit, but BSE is, as usual, contributing to the nation building for last 147 years, and that's where the board decided that it should also contribute to ONDC and participate with all its might to create these protocols for ensuring that the e-commerce also takes off among smaller people, like what happened to the UPI. And that's what, but BSE will continue to be at the forefront. As and when any new products are allowed, BSE will be there early compared to other exchanges, because BSE owns its own technology and maintains and operates and develops its own technology. It has more flexibility to allow newer products and newer type of instruments going forward.
Okay, and my next question would be, with the trade receivable discounting platform with the MSMEs, when do you expect it to become sizable enough to contribute to our top line, or will it burn a lot of cash initially?
Our strategy is always to go for a technology which is our own or our partners, create partners in the strategic strength to the table by way of technology or business or both. And that we have done in Beam, that we have done in BSE Biggs Insurance. And so effectively the money burn is hugely limited to very small amounts compared to what a similar sized organization would spend in any new activities, and especially the e-commerce type of activities where literally organizations burn billions of dollars. We don't believe in burning too much, and that's where we continue to control our overall spend by using our technology or our partners' technologies and sort of hard work. So that's where I don't think the amount of burn will be anything significant on that count.
Okay, my third and last question would be any particular timeline by which our international exchange at Gift City would start charging like sizable charges, transaction charges?
Currently, there are no plans because NSE also doesn't charge in IFSC, and they continue to pay for order flow in NSE IFSC, and because of that, we also have to match their incentives, and because of that, we don't see any current plans to do that. But in listings of bonds and all, as I said, we have more than $58 billion of bonds listed, and a large amount of money already raised. That is where we have started earning some revenue. We also have a framework called INX GA, that is Global Access, INX Global Access, where many brokers have started participating by way of connecting to it to route their foreign exchange orders through that platform. And so that's a heartening thing. So at some point in time, if that becomes large enough, that is outbound investment from India into other countries, then that INXGA becomes much more profitable. Currently, it's having a few brokers trading on it, but I have seen a very large number of large brokers going through that as of now and tying up with them to take their India to foreign country outbound orders through that platform.
Okay, that will be it from my side. Thanks a lot. Best of luck for the next quarter. Thanks a lot.
Thank you.
Thank you. A request to all the participants, please restrict to 2 questions per participant. If time permits, please come back in the question queue for a follow-up question. The next question is from the line of Harish Kumar Gupta, individual investor. Please go ahead.
Hello.
Yes, please.
Hello.
Yeah.
Go ahead, sir, you're audible.
Yeah, sir. I just want to ask a question. Like this year, suddenly there has been a sharp increase in the transaction charges, around 100%. But earlier years, this was not the trend. So, what do you think that it is because of new demat accounts are opening, or this is related to particular this year because of bull market, or what do you think, and what do you think about the sustainability of this growth?
Broadly speaking, you answered your question that the value of transactions increase when there is a bull market. There has been sustained bull market, and so market continues in its own position, then you will see a lot of growth into exchange transactions across India, especially equities exchanges. And that is pretty much it. But on top of that, BSE has been able to increase the transaction numbers for the Star Mutual Fund platform. And that has also given a good fillip to the transaction charges increasing. And if that trend continues, then again, BSE will benefit. And of course, in currency futures also, BSE has done well this quarter compared to even this year compared to last year. And that is also basically BSE. So there are 3-4 factors, but still most of them are connected to the bullishness of the market. And that's what you need to keep in mind.
Okay, so considering the current situation, what is your estimates in next 5 years? How much CAGR we can achieve as a company?
I think basically we tend to work more to provide best facilities to the investors, and it is up to investors to trade on that. So it's very difficult for me to predict any CAGR on such things.
Okay, thank you.
Thank you. Participants, you may press star and 1 to ask a question. The next question is from the line of Shri Vallabh, individual investor. Please go ahead.
Hello. Congratulations for a good set of numbers. I have 2 questions. First is related to currency derivative. I'm saying the trend is that we are losing the market share in currency derivative. It seems like that after interoperability, the currency derivative segment losing the market share. I don't know what's the reason, but I'm also trading sometimes in the currency. I can see brokers are, even though they are not setting even though I enable the BSE currency derivative from my side, they are showing in position side as always NSE. So I feel I don't know what BSE is doing to check or validating at broker side whether the trades are executing at interoperability level or it is always routed to NSE level. And we are charging very negligible compared to competitor on currency derivative. I don't feel so that charging less will increase the liquidity. I feel that if you have to increase the liquidity, interoperability has to be in right place. If you see the equity segment, the interoperability help us to increase the market share. So I don't less is beneficial. I would say we are losing some revenue stream over there. So only we have to focus on the interoperability side of from currency derivative side. So this is the first part from the currency derivative side. On second is equity derivative. I'm seeing this. I already raised one thing on the Sensex derivative last year. I feel I haven't raised that question properly, or I haven't recommended suggestion properly. So what I was saying at that time was, can we create a separate index on Sensex 30, as like a Sensex 30 tracker or something like that, which will be like 1/10 of Sensex 30. So because right now even we have launched Sensex 30 several times, but we lose the track of it because of the number of it's a very huge number, and people lose the track of it, and we haven't started very initially. So I was recommending, why can't we create a simple like a smaller index which will track Sensex 30, because most of the people talk about Sensex 30, and this is the most well-known index which we have, and we are investing quite a lot on Sensex 50. But I'm not saying it's not a bad idea. But what we should do is that we should also, whichever thing we have to use that index and try to give one more try, because we already invested quite a lot. So we give one more try and create another index and launch a derivative on that one. The figure will be around 6,000 or something like that range, and that is very good for investor or retailer to trade on that index. So these are the two questions which I have from my side. Thank you.
Thank you. So currency derivatives, as I mentioned in my speech, we seem to be increasing the market share this year vis-a-vis last year. Last year, due to the COVID, the banks actually stopped having their own people going to their banks, and that's why we were basically depending on the larger banks who were trading on us, and they, in a way, some of them reduced their activities. That's why our market share has gone down. This year, our market share is going up because the banks have started functioning well, and some of them are also price-sensitive customers. So despite your feeling that people are not price-sensitive, some of them are, and we will look into it again as your suggestion is. Similarly, your suggestion of cutting Sensex down by 10% to rather by 90% to 10%, which again that suggestion has come for last almost 20 years since the equities derivatives have been in place, and NSE took large market share there. We have tried many things. This also, in a way, is worth trying, provided SEBI gives approval. And so we have been thinking through many such things. Once it comes, I'm sure you will, in case it is allowed, I'm sure you will trade and make your friends trade in that.
Yeah, thank you. Appreciate it. Yeah. That's it from my and congratulations on good set of numbers. Thanks for clarifying my. Yeah, thank you.
Thank you. Participants, you may press star and 1 to ask a question. The next question is from the line of Ayush Tandya from Ashwani Dandia and Company. Please go ahead.
Hello, sir. Congratulations on a good set of numbers. My question was mainly regarding the sharp fall of investment income we have seen. Even though our top line has been very robust, the revenue of operations have been robust, but the only fall we have seen is investment income, which has reflected also in our PBT and PAT. Do you have any comments on that, why it has happened, and what does it primarily consist of?
Ma'am?
Yeah, so the reason for the sharp fall in investment income is because of the accounting standard, which requires that whenever you invest in any investment which is not long term and which doesn't have a fixed maturity, you have to market it on a quarterly basis. So this results in a situation that when we do mark to market, the market value of a scrip goes up and down depending on the market perception of the rate movements. In the last quarter especially, what has happened is that market started anticipating the rise in interest rates across globe. And now what happens is that we have invested a lot of money in FMPs which give a predetermined return, and that comes to us irrespective of whatever the interim moments are. And that money is earned over the period of the FMP. Now, other thing is that we invest in other mutual funds also, and the thing which we have to keep in mind is that BSE has to invest only in very safe securities as per its investment policy, and obviously no company would like to risk the public fund by doing investments which are very risky in nature. So we invest in liquid schemes, and because we're expecting that the rates are likely to rise, we have kept it in short term also. But because of this yield pressure coming in the month of December, the mark to market has gone down, and that's the main reason why you will see that you have seen that our investment income has gone down on a consolidated basis. On a standalone basis, the last quarter we had earned 19 crores of dividend income from our associate CDSL. So that is the main cause of a big difference which you are seeing in standalone accounts.
All right, sir. That answers my question very well. My second question was regarding that. Is there any way we can monetize the Star MF better given the tremendous growth we have there, along with the Lions market share?
In a way, the MC negotiates on their behalf, and so after almost 12 years of operations and first 9 years of zero revenues, we have come to a level where we are able to charge, and the competition actually still continues to spend much more money, and this is a reasonably profitable business for us. And so we have come a long way, but we have a longer way to go. So what we have got is, despite the cutthroat pricing, which highly profitable monopolistic competition ends up doing, and despite that, because of our services and technology, we are able to give better quality of products, and that's where people are mutual funds, which are again highly sensitive on pricing, are paying, and all disputes have been resolved. They are jointly decided on the pricing, and so currently we'll continue on this framework. Going forward, we'll see how to increase that revenue from different areas.
All right, sir. Thank you very much. That answers my question.
Thank you. Participants, you may press star and 1 to ask a question. The next question is from the line of Ranch Mehta from Sonalika Group. Please go ahead.
Yeah, sir, congratulations on the wonderful set of numbers. My question is with regard to the succession planning for the MD and CEO, what we have been reading in the media, and that it might be ending in the next financial year. So how is that lined up?
It's a good question. Basically, there is a SEBI regulation which restricts the CEO's term to maximum 2 terms of 5 years each. And so I'll be completing it this calendar year, sometimes in the fourth quarter, early fourth quarter. And so we have already put in place a framework which the board is going through as per the SEBI requirements, as per the SEBI's SOP, which was jointly decided by exchanges and in a way given to the SEBI. At least 6 months before the CEO is to retire, the selection process has to start. And so BSE, as a conservative organization, started even before that. And we have applied to SEBI for a specific input from their side. On the other side, the details relating to the search agencies and all are also going on. So effectively, BSE has formally started its process for hiring a new CEO. And BSE's next layer, what we call Executive Management Committee, is stable and well entrenched into the system. Each of them are more than 7 years old into the system, 5 to 7 years old into the system. And they have their teams which are also very highly experienced. And so we have a succession planning for each of the Executive Management Committee member also. So we have a succession planning for the next 3 layers and each person is identified other than the CEO, because CEO selection is a public process, and we have to go for interviewing and advertising for outsiders and so on and so forth. So that's why, other than the CEO, the succession planning within the organization has been conducted and continues to be conducted every year. people identified to take up places for the people who are retiring or even otherwise, and they get interviewed. The board and the NRC, the nomination and remuneration committee, also looks into that up to a 2-layer kind of a process. So effectively, it's a very well defined process. And for the CEO, the process has already begun. And so as and when a new CEO is selected, of course, there will be some hand-holding period and so on and so forth. And that is currently the plan.
And just so you have got the 2-time extension or 1-time extension?
The term, SEBI regulation says you can have maximum 2 terms of 5 years each. So this, I will be completing my 2nd term, which means 1 extension of 5 years. But earlier also, it was 5 years.
Okay.
Raj, do you have any further questions?
No, this is good.
Thank you. A reminder to all the participants, RN1, to ask a question. The next question is from the line of Abhinav Mehrotra from Strike Capital Management. Please go ahead.
Hello, sir. Good evening. My question is about Star MS platform. So every loss-making startup is able to find a private investment in today's market. But beyond that, so in the last conference call, you had mentioned that you will even look into IPOing Star MS in the IPO market. So is there any progress on that?
No, there is no progress.
So is it still open, or is that option closed now to IPO Star MS? Okay. Thank you, sir. That's all from my side.
Thank you very much. Participants, you may press star and 1 to ask a question. Ladies and gentlemen, you may press star and 1 to ask a question. The next question is from the line of Otis, individual investor. Please go ahead.
Hi, sir. So just wanted to chip in on another question. So as we have come out with the bonus of 2:1, do we sort of have a hit on the dividend payout ratio for this FY? And do we as an organization continue to sort of look at creating more shareholder value in the coming years with more such decisions like bonuses and all?
In a way, basically, we have a stated policy on dividend that whatever we earn, 95% to 100% on the main company will be issued out as dividend. So that's a clear-cut stated policy, and it will continue. So if the profits continue to grow up, the dividend will continue to grow up, right?
And do you think with the liquidity dying up a bit, will it have impact on our equity segment, and will it affect our top line in the next FY or in the current quarter?
I didn't get the question right.
I said that with the global liquidity coming down a bit and the transaction volumes lowering down on a sequential basis, say in Q4 this year, like with the current global markets, do you see that the transaction volume and consequently our top line getting affected by that?
I think it's a matter of conjecture because there was a worry about the US market going down drastically.
Yeah.
Just on announcement, and nothing of that sort happened. So it remains to be seen how these things work out. Although the U.S. interest rates as of now are, for 10 years, it's 1.965%, which is almost 3x, 300% jump from, say, previous year. And so there has been a lot that has happened, but it is yet unclear whether it is going to generate that kind of what I call tightening that is expected, and whether that tightening would reduce the equity prices. That also needs to be seen, right? So these are all matters of conjecture, and usually being a regulator first, we tend to be more about practical realities and immediate rather than trying to predict future too much.
Yeah. And as we were talking about your transition, so is there a cool-off period in the SEBI clause where you can't be associated with the exchange post your stepping down, or can you be associated in some other way?
No, I can, in a way, this will all be subject to regulatory requirements and regulatory approvals, and also I currently, whatever way it is comfortable for all parties, we will work on it. But first and foremost, we have to find the best suitable person for BSE, and that is what I call of utmost importance.
Fair enough, sir. Thanks a lot. That's it from my side. Thanks a lot, sir. Good luck.
Thank you very much. The next question is from the line of Sri Vallabh, individual investor. Please go ahead.
Sorry, just last question. I would like to know what BSE is doing to check how interoperability is implemented at broker side. Because we are saying that we are pushing for interoperability, but whether investor can report that there is no interoperability from our end, means whenever we check the trade, or you go at broker side and validate that from your end. Because I think that you have created some SEBI regulator that if broker doesn't implement this one, then you are charging a fine, something like that. If you are implementing fine, then how you are tracking all those things? That's what I was a bit curious about. If you can put some light on that. That's only the question I have. Last question. Thank you.
Thank you, Sri Vallabh. I think it's a very interesting way to look at it. We rely largely on the broker declaration, and also we know the broker is using a particular type of software vendor, and so their versions of a particular software which provides interoperability is tracked. So if they have older version, usually they wouldn't have the interoperability, and the newer version they would have the interoperability. That is an assumption, but we use those two things, broker declaration and the version used. But when our people go for inspections, they also try to check for that. But it is a good idea that you have given us, that in case any investor wants to complain, we would create a framework on our website for you as an investor to make a complaint against a member who is not giving you either the best price execution, because that's also important, and also interoperability in true sense. And you can give, of course, the proof with the data loaded, and then we can go to the broker and check at his site whether it is true or not. And so I think you have given us a good idea, and we will try to implement that going forward.
Got it. Thank you. No problem.
Thank you very much. Ladies and gentlemen, we'll take that as the last question. I now hand the conference over to Mr. Anand Sethuraman for closing comments.
Thank you so much for all for attending the call. I think we can just close this call now. Thank you so much.
Thank you, everyone. Appreciate.
Thank you.
Thank you. Thank you.
Thank you very much. On behalf of BSE Limited, that concludes this conference. Thank you for joining us. You may now disconnect your lines. Thank you.